Iran and Israel are at war. The market sold off last week and it actually rallied today, which probably shocked a lot of people, but I'm going to explain why that actually happened, get into what's going on with recent news, and then get into the charts and give you guys a clear setup over the coming weeks, not just for the overall market, but also some specific tickers that I'm looking at, as well as an update on Unity software if we are still in that play. So I'm going to cover that all here in this video. First and foremost, just looking at the market, you can see that everything rallied today. Some of these stocks were up over 1%. And then a little bit after hours today, there was talks of Iran. Trump was saying that Iran can't have a nuke and that all the citizens of Tehran should evacuate. And then we had China saying all the Chinese citizens that are living in Tel Aviv should also evacuate. And so there might be some sort of escalation here in the next 24 hours. Trump and Rubio left the G7 summit in Canada early to go back to the White House to address important matters. So we're going to find out what's really going on there. The U.S. is also sending a bunch of tanker military aircraft to help posture and defend the existing forces that are in the Middle East. And just 15 minutes ago, Israel and Iran have resumed firing missiles at each other. And then just even more recently, Russia decided to launch missiles and a drone attack on Kiev. And so there's some escalations there as well from Russia into Ukraine. So there's a lot of uncertainty right now in the market, but ultimately I do think that the market is going to grind higher. That's just what history says. Typically, when you have some sort of war outbreak, once it actually happens, the market tends to rally from that point on. Now, this did seem to come relatively quick. Back in October, Iran and Israel were firing missiles at each other, and the market actually only sold like less than 1%. It was 0.8%, and then it rallied from there. And back in February of 2022, when Russia actually invaded Ukraine, I believe it was on this day here, you saw a really strong rally to the upside. And so the market does not like uncertainty. And when we get certainty about what actually is going to happen, then the market usually rallies from there. Obviously, there's more government spending if they are supporting the war. You know, with World War II, there was a lot of industrial production from that and actually caused more of a bull market. So historically speaking, war is actually bullish for stocks after a momentary shock. You know, you have gold rally to the upside when there's a lot of fear and uncertainty in the markets. And that's what you've seen here up and to the right for gold over the last several months. This was also on tariffs and inflation, of course. Even Bitcoin, to some extent, has started to make a move a bit higher. It does follow a bit more with like tech stocks overall, but you can see here that, you know, there's somewhat of a consolidation pattern here forming on Bitcoin, and maybe we can break to the upside. One that I'm really looking at is Ethereum. Ethereum has not recovered as well as Bitcoin. Of course, it had a really bad sell-off on the tariffs, but then since then, it's actually started to try to make this move higher. All-time highs is still way up here around 5K. And what we're really looking for on Ethereum is a break of this green trend line, because then it'll most certainly start to push towards this upper trend line area where it had a false breakout before, and then you had that really strong capitulation move. What we're trying to see now is a false breakdown of this green trend line, and then we'll make a move towards 3,500 to 3,600 on Ethereum. So overall, I'm kind of bullish on Bitcoin as well as Ethereum. I think Ethereum's the better play just because there's more room above it for it to make that move back to prices that it's already seen before, whereas Bitcoin would just break new all-time highs, and then it's hard to judge historically where it's traded. Now, looking at the S&P 500 index, you can see that this was the original sell-off from when Iran and Israel tensions escalated. We came back down and retested this trend line, which has been a key line in the sand for the S&P 500. It was this trend that we broke down before, and we've kind of danced on this line for a period of time, and now we're trying to make a really strong push to see if we can get to new highs. And more recently, we did retrace this full drawdown from Iran and Israel. You can see it came up here, and then they started escalating a bit more. And today we did push and technically fill this whole gap that was here on SPY. And we weren't quite able to push all the way higher, and now we're starting to have a bit of like a rejection. Maybe this is a bear flag. We're going to come back down to this support level that it broke over before, see if it can hold that level. Maybe it'll come back down to here on this red trend line, just depending on what news develop. But ultimately, in the next month, which is plenty of time for all of this to filter into the market, I think that we're going to see a rally to all-time highs. And that's really been the case with, like I said, every single conflict and war outbreak. On average, the market is at least flat 1 month after the outbreak, and the median returns are like 4.5% from when the war actually breaks out. So you can see that the market likes to retrace the move completely and even push higher as fear and other people who flock into gold or volatility products, they start to unwind those positions and the money flows back into risk assets. So overall, I do think the market direction, maybe some near-term bumps, maybe some near-term volatility, but ultimately that's going to be more fuel for price to continue higher as people are aware that, you know, war outbreaks aren't actually all that bearish, and at some point people step in and buy the dip. If a nuke's going to drop anyway, who cares if you lose your money on the stock market, right? It's kind of like a one way or the other, right? So Grab is an interesting play that we've been looking at for quite some time. It's started to raise some more money. I'm still in this position. I have a bunch of shares in Leap contracts really far out into the future. I also run sometimes like a covered call strategy where I'll sell covered calls on this. But Grab has $6 billion in cash, and they've recently raised $1.5 billion. Why would they do that if they already have $6 billion in cash? That is to make a strategic acquisition, either one or two. Now, there's been a bunch of rumors that they're going to acquire GoTo. Some other people pointed out that Food Panda is also a really solid acquisition target. And really, either one of these is going to help them monopolize, either on the food side or the ride-hailing side of the business, into certain areas and try to, you know, compete, right? You have more economies of scale, you consolidate, and you can take more of the market share. So they can grow inorganically by buying one of these companies in different regions, and maybe they can even buy both of these depending on how they actually structure the deals. But ultimately, the market has been, I think GoTo has been pushing a bit higher. Over the recent weeks, it had like a nice jump here, then it came back down. But Grab is really one that I think at some point is going to come back up and test this 567 level. The volume shelf is all the way down here at $3.80 to $4. I think it's a really good buy zone if it can get back down there. I'm not sure if it will. This move was just like a dilution type move, even though this $1.5 billion that they raised isn't dilutive until 2028, and it's minimal as well with how it's actually structured. So I do think at some point Grab is going to push up and to the right, break through this bear gap that's been sitting there out of this long consolidation period and push towards 680, 760, and even potentially up to this $10 level. But really, I'm looking to take a lot of profit out as we start to break over that $6 level. Next, let's take a look at Apple. Apple's a stock that I've been revenge trading over the last couple of weeks. It's not really recovered all that well from the April lows relative to all the other Mag 7 stocks like Nvidia, Meta, Microsoft. You can see all these stocks have pushed a lot higher, even to all-time highs, but Apple has kind of fallen behind those. Not a lot of people are buying it. Now, I do think that after option expiration, which is June 20th, which is quad witching as well as futures roll expiration, right? So a lot of things are expiring, and I think that Apple will pave a new way, and I think that the gamma flows, option flows from monthly to the next quarter will help Apple. Apple has been a company that has not innovated as much as the others. Like Tesla is building robots now. It's switched from cars to robots. And when you look at Apple, it really has just come out with the same iteration of the iPhone over the last 20 years or so. And now more than ever, they're actually trying to create a foldable phone. They are working on a HomePad, which is kind of like a at-home speaker. It can also control just like a smart home hub for your house. Then they are looking at like a Vision Pro to try to compete with Meta's glasses, but they're going to be like Vision Pro Airs, right? Vision Pro is an awesome product. It's just very expensive, and I think that's why it just didn't do all that well compared to the cheaper alternative of the Meta Quest. And then they're also thinking of doing like an iPhone Air, so you can get like even a skinnier iPhone. Siri is going to get a development with AI involved. So I think that all of these things are pretty, and I think there's like AirPods 3 as well. So they're actually, and then wearables and things like that, right? So they're going to still try to push out all these different products. But if you look at Apple, like the foldable iPhone, that's a big thing. Making the iPhone skinnier, I think that could also be a big thing. The foldable one I'm really interested in to see how that turns out. But this is really the most innovative from a product standpoint that Apple has been in probably the last decade. And I think that that could be something that really helps its stock over the coming 6 months to a year. But ultimately, you know, they buy back their stock. This isn't a not so bullish setup, but it's just lagging behind all the others. And I think at some point it can start trying to break out of this range and probably push back up to this 220 level. But really what I'm looking for, if you look at these volume shelves, is I wanted to get through this higher volume area, flip this 206 level as support, and then really it's going to probably try to fill in a bit here. But as long as it can hold this 206 level, I wanted to try to get through this higher volume shelf towards 213 to 214. And if it can hold that area, this area is a low volume. So price will likely push through that low volume area to the next high volume area, which is around here. And you can see that this also lines up with these levels where it's bounced from or found resistance before. And so that 219, 220 level is really a key level where I plan to take profit on Apple calls. So that's really what I'm looking for, is like holding this lower trend line, starting to push through these volume levels, and then get to that 220 level, which is also going to line up where this trend line is, depending on how long it takes to get there. And so I think Apple is a really good play over the next couple months. I would just push out contracts to at least August is what I'm in right now. I got burned on the Junes back here once they started putting out hit piece after hit piece on Apple, and Trump said that iPhones would have a higher tariff if they're not built in the US. Next one is Tesla. Tesla's at a pivotal point. It does have the robotaxi event coming up. Really the flip point that you're looking at here is this 332 level. This is where it had the sell-off before when Elon was losing his mind on Twitter, but now he's made friends with Trump and they're trying to relax the regulations around fully self-driving cars. And if the robotaxi event does go well, this could be bullish news for the stock. 332, I'd be playing calls to the upside towards 360 to 365. If this is not able to hold, then you're going to see a retracement all the way back down here to 280 to 285 zone. And maybe that would be a good place to actually start to buy the dip, and then hopefully it can push through and get through to that 365 after that. Usually when you have an event, it usually doesn't go as well as people intend and the stock sells off. That was the case with like Apple's event, AMD's event. But you can see that literally AMD had the event last week, or I think it was on Thursday, and then it sold off, came back down for this retest, and now it's pushing to the upside, which really leads me into the next stock that I want to cover. Is I'm bullish on AMD. I've talked about this one. It's a really clear break of this downtrend. It broke through, it retested once, came back down, filled this gap, and then filled this little gap here. And then you can see here, it opened here. It filled the gap down to here. And then, let me see, I can delete this. You can see that it opened above the gap, filled the gap down in the morning, and then it just had this really strong ripper to the upside to 128, which has been that first target level of what I was looking for on AMD for some short-dated calls. I did scalp some calls as well as buy into some more shares because I do think that AMD is very undervalued. I think the stock could at least 2x over the coming years as inference becomes a bigger thing with how AI is not really trained, but how it's thinking outside of the box compared to NVIDIA's chips, which are more like a closed training model. So AMD actually has a really strong bull case from a fundamental perspective, really strong fundamental or technical breakout that you're seeing here, low volume node that it's going to want to try to push up to like this 132 level. That's an area, if you're playing short dated calls, that you should probably start to take some profit. Maybe it'll get a little bit higher to like 134. But ultimately, for it to start pushing through and getting much higher, it's going to have to get through this higher volume area between 134 to 145 and then start trying to make a push towards some of these gaps that still exist in the structure of the price. And then last but not least, let's just take a quick look at Unity. I'm still bullish on this stock. Obviously, we had a little false breakout, and that killed the momentum last week or 2 weeks ago when the CTO resigned for personal reasons, which doesn't really have an impact on Vector, which is its new platform. So it's kind of a nothing burger, but nonetheless, it had a really high volume. People capitulated. It killed options premiums, and you can see it's kind of just like drawn down over time on lower and lower volume. So not much volume here. It's starting to find a base. It did fill some of these bull gaps that were there previously, which isn't great. It formed a little bull gap today. The market's selling overnight, so we'll see where this opens tomorrow. But I would really like to see it make another push towards this 2568 level, try to get through this volume shelf to 2684. And if it can break over that level, then we're going to have a really nice breakout after a false breakout before. So that would be really bullish. We would see like a retest or so. Maybe they might be worth taking some profit on shorter dated call contracts if you're in those, or selling covered calls if you are in shares. I think that's really a good strategy right now. It's just to buy shares of the underlying and then sell a covered call, so you're protected on the downside, but you'll participate in a move to the upside. And so that's a really good strategy right now. The whale, which I believe to be Roaring Kitty, is still in this stock. You can see that all the open interest is still here on all the open interest. I don't look like it doesn't show here on TradingView, but you can see that these really large blocks of volume that occurred, there's like over 80,000 open interest on the 30 calls for January. That's still there. So our whale has not left this play. And even though time is going on, it has retained its price of these contracts fairly well. And so I do think at some point, Roaring Kitty is going to tweet about this stock between now and January. So I've kind of pushed out my beliefs. I'm being a little more patient. I have a lot of September, December, and even some January call contracts. I also still have July and August, but I'm starting to push out my dates, load more, and just be patient and hope for this move to play out over the next couple months, where I think that Unity can get over $30 a share. And if a lot of mainstream picks up this stock, we could definitely start seeing a push towards 35, even all the way up to this more recent high around $43 a share. It just really depends if this can have a GameStop style squeeze like GameStop did last year. So I hope you enjoyed this video. I know I covered a lot, but Make sure you guys join the Discord if you haven't already. I'm not selling anything. It's all completely for free. I'm just posting everything in there, just trying to meet other traders like yourself who are trying to become the best, most successful, and most profitable traders. We're discussing a lot of different strategies in there on trying to create something with AI to make a repeatable, somewhat brainless strategy where we can just collect premiums every single week. So that will be rolling out soon. We're going to start doing some beta testing with that with a smaller account and see if that yields any results. So yeah, a lot to cover, a lot of value there. I hope you enjoyed this video. Subscribe, like, comment, and I'll see you in the next video, guys. Peace.